Just not good enough. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of April 30th, 2018. And I'm recording this on Saturday, the 29th. And I say, just not good enough. There was really good news last week. If you think about Google's parent company, Alphabet, net profit jumping 73%. They were up a bit, but not that much. And Facebook revenue jumped 49%. And daily active users up 13%. They were up a bit, but not that much. Amazon was up on good results. And also, we've got geopolitical developments, the North and South Korea meeting, and other big events going on that all seem positive, but investors in the market seem to be discounting good news. The week prior, we had all the financial institutions reporting with some really good results, and I'm showing the CNN Money Fear and Greed Index and still pegged in the fear range, and it has been for a few weeks. A month ago, it was at extreme fear, and it just seems that investors and market participants are just waiting for the next shoe to drop, the next bad news to come out, whether it be a trade war, raising interest rates, who knows. I'm showing the S&P 500 daily chart here, and in times like this, it's good to retreat into reality and step back from the headlines a little bit and just go, what is the price action showing us? What is the reality of price action? And we can see we're in a very clear kind of no man's zone. If we look at the Ichimoku cloud, the top of the current cloud is up here. I'm drawing a line, and the 200-day moving average is down here, and we're between these, and we're actually right up under the cloud. And so I continue to say, if we break down through the 200-day moving average, we probably got a bigger correction coming. If we break up through the cloud, through some resistance areas, we probably got new highs coming, but not giving any indication on a technical basis of a direction yet. So we just have to wait and watch. And again, it seems that people are very skeptical about good news and are discounting it and just waiting for the next bad news, potentially, which could have an outsized effect on the market. And this comes on the heels of a 9-year bull market where any kind of reasonable view of history shows us that after a big run up of 9 years, I can't even see it on a weekly chart. Let's go to a monthly chart. On a monthly chart, we've had a dramatic move up, and historically, big moves up have resulted in a correction. We've got a big move up, and we're slowing down up here at the top. And legitimate concerns are that there would be another correction coming pretty soon. And again, on the weekly chart, get there. If it starts to happen, and we're close to seeing some proof of that, it could be down to the 2100 to 1600 levels on the S&P 500. Would not be an apocalypse, would not be the end of the world. It would be a normal, healthy part of the ongoing market cycle. But for now, we got to wait and watch and see how things develop. We have to trade very carefully. It's a tough market to trade in right now, but that's not unheard of. We've had difficult markets to trade in before. What really is unusual is a unvolatile, smooth market heading up. That is unusual. Even as the market goes up in the history, it's gone up with some pullback. So, difficult trading, but trading's always hard. That's why it's not an ATM machine you can go just withdraw money from. We have to be careful. We have to use risk control. We have to analyze the markets and trade accordingly and try to detach ourselves from it and just trade the reality. And we're in a period of market consolidation where we're trying to choose a market direction. Having trouble getting my time frames here. So let's watch these key levels. Breaks above the cloud about 2708, more highs. Breaks below, let's call it at about 2599, 2600, probably heading down. So we'll just trade the realities and be calm and enjoy the ride. If we're using risk control, proven trading plan, we will get profits consistently over time, even during periods of transition. Let's go ahead and take a look at gold and oil, as we always do to wrap this up. Gold has been recently very volatile. It's not giving us any clear direction. Overall, still in an uptrend, but right now it's, a larger term high, higher low, hasn't gone lower yet, but hasn't put in new highs either. So it's in a volatile sideways channel with a bias to the upside. And if it heads up, we'll be trading it. If it doesn't, we'll stay out. Oil is in an uptrend. It's pretty good. Oil's always volatile, but we've got a price target between $71 and $80 on the crude oil futures contract. Pretty clear uptrend. It's gone up quite a bit. It's consolidating over the last week, but all indications are continued highs to come. Well, that's it for this week. Again, difficult trading environment, but it's, more times it's difficult than when it's easy. So we'll work through it, and if there's a big move that begins, we'll trade according to that and book some good profits. That's it. As always, send me your questions, your comment, your feedback, and I look forward to it. I respond to every single one. Other than that, trade safe. Keep the winners big, the losers small, and don't get too caught up in all the news. All right, take care. Thanks.